Sound check. Or hello, hello. Oh, hi, ladies and gentlemen. Welcome, welcome. We're gonna. I'm just giving you a warning. We're gonna start right on time. So it's 2:58 now. So 2 minutes to find your seat. Thank you so much. Trevor is there. Oh, there he is. Are you? You're not. I'm not. Okay, the clock has struck 3. Welcome, everyone. It's good to see everybody. It's now 3 p.m. and the secretary having advised me that we are quorate. I hereby call this meeting to order. I'm Peter Melhedo. I'm the chairman of Sagicor Group Jamaica Limited, and it's my pleasure to welcome you to the 12th annual general meeting of the shareholders of Sagicor Group Jamaica Limited. Before we proceed with today's agenda, I'd like to take a moment to welcome a few folks. We have Ms. Gail Moore, who is our new audit partner for Sagicor Group. She succeeds Garfield Reese. Did I say Garfield on the back? Yes. Gail, I hope you've practiced up your vocal cords for your reading. And I know you'll do a better job than Garfield used to do so. But really want to thank our outgoing partner, Garfield, for all the work he did over the many years with Sagicor Group. Thank you so much, Garfield. We also have PwC Audit Director, Mr. Mark Scott. Where's Mark? Okay, Mark, great. He's also with us. Oh, he will be reading the 2025 report. Okay, sorry. Okay, so thanks for that. I'd also like to extend a special welcome to Mr. Trevor Patterson, TOP. He's in the audience there, our primary external counsel. Welcome, Trevor. Additionally, I'd like to remind you that our press release entitled Sagicor Group Jamaica to merge with Sagicor Life Inc., unifying Caribbean operations, dated December 16, and then there's a whole web address which I'm not going to read out to you, but there's a PDF attachment. I'd like to remind you of that release. We've advised that Sagicor Group Jamaica Limited has entered into an agreement with Sagicor Financial Company Limited to merge with Sagicor Life Inc. into a single Caribbean holding structure to be known as Sagicor Group Caribbean, SGC. The proposed transaction, which remains subject to the customary regulatory and shareholder approvals, aims to unify Sagicor's regional operations under one Sagicor. The one Sagicor vision, creating a stronger and more integrated financial services group for our customers. Following the transaction, SGC will replace SGJ as a listed entity on the Jamaica Stock Exchange through a court-approved scheme of arrangement. This merger, you'll hear a lot more about this merger from others, but this merger will improve our ability to serve our customers, enhance operational efficiency, create regional diversification, and strengthen our resilience to economic and climate-related challenges. We expect to leverage this greater scale to invest more in technology and broaden our expertise while maintaining continuity of service, policies, and client interactions throughout the transaction. An EGM for the approval of the proposed transaction will be duly convened in keeping with legal requirements, and we'll keep you updated as to the timing of that EGM. And also, just to remind you, we'll have an opportunity to fully ventilate any questions you may have on the new Sagicor Caribbean Group Caribbean. I'm also pleased to inform you that later in this presentation, we will address any questions you may have after you have heard from the CEO of our group, Christopher Zaka, the auditors, actually Andre Mousseau as well, and myself. While we may not have time to answer all of your questions during this forum today, we will ensure that each question receives an individual response, as we always do. And lastly, you'll be invited to consider a number of resolutions later down in the program. So I'm going to start with the notice of the meeting. The notice of the meeting was dispatched to all shareholders on April 30, 2026, and was also published on the Jamaica Stock Exchange's website and Sagicor's website on the same date. If there are no objections, I respectfully seek permission of the meeting to take the notice convening the meeting as read. Thank you. So may I have a motion? Thank you, David. Seconder. Could I have a seconder? Thank you, Joanna. All in favor? Okay, any against? Okay, the ayes have it, so thank you. We carry that motion. Okay, I'd like to now introduce the directors, your Sagicor directors. Some of us, most of our directors are here with us today. Some, unfortunately, couldn't make the trip and are joining us remotely. So I'd like to start, and I'll start as it is on my program, not in order. But Mr. Andre Mousseau, who also serves as President and CEO of our parent company, Sagicor Financial Company. Mr. Mousseau. Mr. Christopher Zaka, known to all of you, President and CEO of SGJ and the CEO designate of Sagicor Group Caribbean. Mr. Peter Clark, traveling all the way from Trinidad to be with us. He's also our audit chair. Dr. Jackie Coke-Lloyd is also here. Dr. Marjorie Fife Campbell. Mr. Jeffrey Hall. Mr. Philip Armstrong. He didn't get the memo about wearing a tie today. Mr. Paul Hanworth. And Mr. Stephen Facey, also without the memo. Joining us online is the Most Honorable Doddridge Miller, who is the nominee for chairman of Sagicor Group Caribbean. Doddridge, I think a well-known person to us all here. He's also joined by Dr. Stephen McNamara. Dr. Stephen, thank you. And Miss Kathleen McLaughlin. We're having trouble. There we go. Welcome all. I have apologies for Mr. Mahmood Kimji, who is unfortunately unable to attend this meeting and sends his apologies. We also want to recognize our company secretary, Dr. Sharma Taylor, is here with us. And we also have as a very special guest, SFC's Executive Vice President and Chief Operating Officer of the Caribbean, Mr. David Noel. There he is. Stand up, David. Thank you. So really a distinct pleasure to welcome all of our overseas directors and David, and we sincerely thank them for making the journey to be with us in person. At this point, I'm going to pause a bit and just to take a moment to acknowledge the passing of one of our shareholders, Mr. Orrit Staple, who died earlier this year. Many of you will remember Mr. Staple as a regular attendee at our AGMs. His presence was always felt through his active participation and his thoughtful contributions. He never hesitated to ask the kind of probing questions that kept the board and management focused and accountable and made the AGM discussions more productive. Just as a side note to that, he was a man very fond of reading the notes to the balance sheet and P&L and would ask detailed questions on a particular note that would send Andre Holong scrambling to find the right reference. We really valued his insight and his genuine commitment to the business of Sagicor, and his engagement reflected real care for the company and its future, and his absence will be felt. So if we could just take a moment to observe a silence in his honor. May his soul rest in peace. Okay. So now the next order of business, I'd like to invite Mr. Mousseau to the platform to address the meeting, give us some remarks. Andre.
Thank you, Chairman. Good afternoon. And welcome to my fellow shareholders of Sagicor Group Jamaica. You know, it's only been 5 months. It feels like it was much shorter than that, but it's been 5 months since many of us gathered on this stage. Back in December, it was myself, President Zaka, and the Robert Terrestrial, the President and CEO of Sagicor Life of the Southern Caribbean, to unveil and espouse the virtues of combining our Caribbean, our Sagicor Caribbean operations in the Northern Caribbean under Sagicor Group Jamaica, and broadly speaking, the South and the East under SLI. And all of this being subject to regulatory and shareholder approval. It remains a work in progress, but if anything, the work that we've done over the past 5 months has strengthened our conviction that this is absolutely going to be transformational for the Jamaica Group, for the Sagicor Life and the broader Caribbean, and will ultimately strongly accrue to the benefits of all of our stakeholders, resulting in better experience for our policyholders and our customers, tremendously improved experience for all of our team members, and ultimately pay dividends that will accrue to all of us as shareholders of these companies as well. By combining our operations, we will have access to the best of our talent. We'll be able to share in all of our best practices in a seamless manner, and we will together have the scale to truly transform our operations by allowing Sagicor to act as a single entity and to effect a robust digital transformation that will truly modernize these great businesses and these great franchises ultimately to the benefit of our financial community, to the communities to which we serve, and everyone in the Sagicor family. And we look forward to building on our 185 or perhaps 186 now years of history to finally create a true integrated one Sagicor regional champion that can be an example for the financial services and for the business sector in the region. So there's lots of other things to talk about, and I'm sure Chris has other things to talk about in terms of what was ultimately a successful 2025. But all of the near-term financial performance, we think, is really dwarfed by the possibilities that we see going forward. So with that, I'll pass it back to you, Chair, and we'll look forward to Chris's comments and to our annual exercise in shareholder engagement.
Thank you, Andre. Exciting times indeed. Close on the home front, I'd like to take this opportunity to commend the excellent work carried out by the board during the past year. Our board committees in particular at both the subsidiary and group board level. We're grateful to the members and management for their continued vigilance, diligence, and guidance on critical governance functions throughout the year. I think in recognition of this, the company has maintained its upward trajectory improving its score on the JSE's Corporate Governance Index, the CGI. The CGI serves as a benchmark for assessing the corporate governance practices of listed companies against international best practice and legal and regulatory requirements as embodied in the rules of the JSE, the Companies Act, and the Securities Act. Having achieved the highest rating of AA for 2024, the company has once again earned an AA rating for 2025, surpassing its previous score with an impressive 95.5%. So I'd like to recognize our corporate secretary, Shama, who has done a tremendous job in putting this all together, and our CGC chair, our corporate governance chair, Marjorie Fife Campbell. So really well done, and just underscores how seriously we take our risk management at Sagicor. And additionally, for the third consecutive year, the company's annual report placed in the top 3 at the JSE's Best Practice Awards held in December 2025, having been awarded second place in the Best Annual Report main market in respect of its annual report for 2024. So we are maintaining our position in the top 3. Big congrats to the board members, the management, the team, and all team members for their pivotal role in helping us achieve these significant corporate governance milestones. And I think this report, while it's only top 3, I think in terms of weight, I think we may be at the very pinnacle. All right, so back to the procedure for the meeting. So the notice of the AGM can be found on page 14 of the annual report, and this contains the agenda items for today's meeting. The first item of ordinary business of the meeting is to receive the audited accounts for the year ended December 31, 2025, and the reports of the directors and auditors thereon. After that, I will ask the Group President and CEO, Mr. Christopher Zaka, to address the meeting to provide you with a high-level summary of FY 2025, as well as an update on current operations and the outlook of the company. Once Chris finishes, we'll open the meeting to questions from shareholders. And just a reminder on housekeeping, when you come up to ask a question or go to the mic to ask a question, we just ask you to state your name and then just wait to be acknowledged. So thanks for that. The second, third, fourth, and fifth items of business will deal with the resolutions to re-elect directors and adopt the remuneration of the directors and auditors for the year ended December 31, 2025. The sixth item of business is a ratification of 2 interim dividend payments made on April 30, 2025 and October 16, 2025, and I think that's the most satisfying part of business for shareholders. Okay, so on the first item of this afternoon's agenda, the latest audited financial statements and reports, which were contained in the company's annual report for the year of 2025. The company's annual report was lodged with the Jamaica Stock Exchange on April 30, 2026. A copy of the company's 2025 report is available for download from the company's website. We're trying not to cut down too many trees, so we encourage you to use the website. So I'd like for a motion to be proposed that the director's report will be taken as read. Thank you, David. Seconder. Andre, thank you so much. Hold on. Those in favor? Okay, any against? Okay, motion carried. Now for the big deal. Mr. Mark Scott, representative of the auditors PwC, to read the report of the auditors. The key audit matters for the period 2025 are highlighted in the financial statement starting at page 117. Take it away, Mr. Mark.
Thank you very much, Mr. Chairman. All right. Good afternoon, everyone. Independent Auditor's Report to the members of Sagicor Group Jamaica Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of Sagicor Group Jamaica Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at 31 December 2025, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated statement of financial position as at 31 December 2025, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at 31 December 2025, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statements comprising material accounting policy information and other explanatory information. Basis for opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, including International Independence Standards, issued by the International Ethics Standards Board for Accountants, ISBA Code, as applicable to audits of financial statements of public interest entities. We have also fulfilled our other ethical responsibilities in accordance with the ISBA Code. Our audit approach, audit scope. As part of designing our audit, we determined materiality and assessed the risks of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involved making assumptions and considering future events that are inherently uncertain. As in all of our audits, we also address the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. We have determined that there are no key audit matters as it pertains to the standalone financial statements in our report. Key audit matter, loans and leases, probabilities of default, forward-looking assumptions, and significant increase in credit risk group. Refer to notes 2F, 3B Part 4, and 9 to the financial statements for disclosures of related accounting policies and balances. As at 31 December 2025, loans and leases after allowance for credit losses totaled $157.6 billion on the group's consolidated statement of financial position and represented 22.4% of total assets. The impairment provision recorded under the IFRS 9 Financial Instruments Expected Credit Loss (ECL) model amounted to $2.6 billion. The ECL impairment model takes into account reasonable and supportable forward-looking information (FLI) as well as probabilities of default (PDs). PDs represent the likelihood of a borrower defaulting on its obligation over the next 12 months or over the remaining lifetime of the obligation. For loans and leases, PDs are developed based on the group's specific historical default rates for each industry classification. In performing historical analyses, management identified economic variables impacting credit risk and ECLs for each portfolio. Various scenarios were identified and weightings assigned using macroeconomic factors as well as management's experience and judgment. To determine whether there is significant increase in credit risk, SICR, the group considers reasonable supportable information that is available, including information from the past and FLI. The underlying model and its calibration, including its sensitivity to FLI, requires the use of assumptions which are highly subjective and sensitive to the risk factors, estimation of which requires significant judgment. We focus on this area because of the complexity of the techniques used to determine PDs and the number of significant judgments made by management regarding possible future economic scenarios. How our audit addressed the key audit matter. Our approach to addressing this matter with the assistance of valuation experts included the following procedures amongst others. Updated our understanding of management's ECL model, including any changes to source, data, and assumptions, and tested the mathematical integrity of the model. Evaluated the design and tested the operating effectiveness of the relevant controls for the FLI and SICR in the ECL model. Evaluated the appropriateness of management's judgments pertaining to FLI, including macroeconomic factors and the basis of the multiple economic scenarios used. Sensitized the various inputs and assumptions as part of our reasonableness tests. Tested the completeness and accuracy of the historical data used on a sample basis by agreeing the details of the customer payment profile to source documents. Tested the staging of a sample of loans by reference to the number of days outstanding on the loan. Tested the critical data fields used in the ECL model for the PD determination, such as default date, effective interest rate, write-off data, and the loan type by tracing data back to source documents. Performed an independent qualitative assessment for a sample of borrowers to determine whether there was any adverse public information affecting the criteria used to perform the staging in relation to management's SICR. Evaluated the reasonableness of the weighting used for the worst case scenario by agreeing the forward-looking economic information to published external sources or reputable third parties. Sensitized the probability weightings used in the calculation. Key audit matter: valuation of insurance contract liabilities, estimation of fulfillment cash flows group. Refer to notes 2Q, 3B Part 1, 30 and 33 to the financial statements for disclosures of related accounting policies and balances. As at 31 December 2025, insurance contract liabilities totaled $199.6 billion, or 34.1% of total liabilities. Insurance contract liabilities measured under the variable fee approach and general measurement model consist of contractual service margin, CSM. This is a component of the carrying amount of the asset or liability of a group of insurance contracts issued, representing the unearned profit that the group will recognize as it provides insurance contract services in the future. Fulfillment cash flows, FCFs. These are the current estimates of the future cash flows within the contract boundary of a group of contracts that the group expects to collect from premiums and pay out for claims, benefits, and expenses, adjusted to reflect the timing and the uncertainty of those amounts. FCFs comprise unbiased and probability-weighted estimates of future cash flows, discounted to present value to reflect the time value of money and financial risk, plus a risk adjustment for non-financial risk adjustment. Measurement of the FCFs require management's judgment in determining the probability-weighted mean of expected future cash flows on a present value basis, in addition to applying a risk adjustment. Estimates of expected cash flows incorporate best estimate assumptions for mortality, morbidity, longevity, expenses, and policyholder behavior, as well as assumptions for discount rates and the risk adjustment. The assumptions are reviewed and updated at least annually by the appointed actuary. We focus on this area due to the judgment applied by management when determining the FCFs and the assumptions described above. How our audit addressed the key audit matter. Our approach to addressing the matter with the assistance of our actuarial experts included the following procedures, amongst others. Updated our understanding of management's end-to-end process and controls supporting determination of FCFs. Tested the accuracy and completeness on a sample basis of data inputs such as gross policy premium and reinsured amounts used in the estimates of future cash flows. Assessed the independence, experience, and objectivity of management's actuarial experts. Assess the reasonableness of management's best estimate assumption for mortality, morbidity, longevity, expenses, and policyholder behavior, lapse and surrenders, and economic assumptions for discount rates, and the adjustment for non-financial risk by evaluating whether management's assumptions were determined in accordance with the requirements of IFRS 17, evaluating the company's internal experience studies for appropriateness by considering published industry studies, market data, and the product-specific facts and circumstances. Evaluated a sample of actuarial models used in management's determination of FCFs by assessing the appropriateness of the modeling of product features, assessing the appropriateness of the application of best estimate assumptions. Assessing the disclosures within the consolidated financial statements against the requirements of IFRS 17. Other information. Management is responsible for the other information. The other information it comprises the annual report, but does not include the consolidated and standalone financial statements and/or auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available and, in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS accounting standards and the requirements of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern and using the going concern basis of accounting unless management either intends to liquidate the group or the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditors' responsibilities for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cause significant doubt on the group or the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report and to the related disclosures in the consolidated and standalone financial statements, or, if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Plan and perform the group audit to obtain sufficient appropriate audit evidence regarding the financial information of the entities or business units within the group as a basis for forming an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and review of the audit work performed for purposes of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, actions taken to eliminate threats or safeguards applied. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Garfield Rees. Signed, PricewaterhouseCoopers, Chartered Accountants, Kingston, Jamaica, 2nd of March, 2026.
Boy, Garfield, I don't know if it's youth or the fact that the key matters seem a little less than normal. I don't know how it goes, but well done, Mark, well done. And I think I have to use this platform to plead with the regulators that we really, I think anybody who can absorb what is being said can read. So really to repeat it again seems a little counterproductive. Okay, so Sir Livingston, I just want to remind you, Mr. Zaka is going, I know you're getting your questions ready, but Mr. Zaka is going to present between now and then. So I'm not saying you don't stand up, but I just warning you that could be a little while. I'll make sure you're the first for questions, Livingston. I'll take you first. Okay, so the audited accounts for the year ended December 31, 2025, and the reports of the directors and auditors were circulated and are now before the meeting for discussion. However, before the resolution is put to the meeting, I'm going to invite Mr. Zaka, President and CEO, to address you and give you further color on these results.
Thank you, Mr. Chair. Good afternoon, members of the board, members of the executive in the first two rows, fellow shareholders, and members of the Sagicor family. Good afternoon. So, are we going to project at the front? Yeah, there you go. By the way, David, look behind you to your right. Look at the shirt the gentleman has on. So our strategic priorities guide our long-term management performance and our board governance, and they include regional expansion, and what better way than Sagicor Group Caribbean. Revenue growth, where we try to generate and grow revenues in new ways. Digitally transform the business, which has been accelerated and will be facilitated by Sagicor Group Caribbean. Obviously, our client relationships are front and center at all times. Again, will be aided by digital transformation and Sagicor Group Caribbean. And talent retention, again, which will be aided by Sagicor Group Caribbean in allowing a much broader organization to draw on talent and retain talent from across the Caribbean. One Sagicor, geographic expansions. So the poster child for that is Sagicor Group Caribbean, as you have heard. Sagicor Life Inc. is a leading Caribbean life and health insurer with operations throughout the Caribbean, but major operations in Barbados, Trinidad and Tobago, and Eastern Caribbean. The Sagicor Group Caribbean merger will combine Sagicor Group Jamaica and Sagicor Life Inc., which is a Southern Caribbean Sagicor, under a new regional parent company, Sagicor Group Caribbean, which will replace SGJ as the listed parent on the JSE. SGJ and SLI will then become, therefore, subsidiaries of SGC. The transaction will be implemented through a court-approved scheme of arrangement involving the approval of the SGJ shareholders, the issuance of new debt and equity, and obviously the integration of SLI with SGJ. And as you have heard, it will create a more diversified Caribbean financial services group, and I would say a powerhouse group with expanded operations across the Caribbean and in Latin America. We're therefore positioned for greater scale, enhanced efficiencies, and long-term regional growth and sustainability. In terms of progress, we're aiming for a closing of the transaction at the end of this year in Q4. Key legal and structuring steps are very much underway. Regulatory engagements and submissions have started and we have submitted to the major regulators. And as I said, it will require the approval of the SGJ shareholders through a court-ordered scheme meeting and an extraordinary general meeting, and we expect both of those to be effected in Q3. So just to be a little clearer, on the left, you will see the current state of how the ownership of SGJ is, and that is where our ultimate parent, Sagicor Financial Company Limited, and other shareholders, we have to mention that of those, Panjam is the most significant, own Sagicor Group Jamaica, and 100% of Sagicor Life Inc. is owned by Sagicor Financial Company. Post-close, what you will have is Sagicor Group Caribbean being owned by Sagicor Financial Company and the other shareholders, which again will include a significant ownership by Panjam of Sagicor Group Caribbean, which will be the sole parent and 100% shareholder of Sagicor Group Jamaica and Sagicor Life Inc. So this merger will give us greater scale, a broader reach. You're looking at a combined balance sheet of over $7 billion. So David, it has gone up since you wrote the article this morning. In terms of priorities, digital at scale, you've heard all about that. In 2025, and we're just talking SGJ now, back to SGJ, moving on from the Caribbean merger, we launched a number of significant digital initiatives, and we made significant investments in capabilities to simplify operations, strengthen our client engagement, and support long-term growth. And you will see on the screen all of those. But at the end of the day, our continuing digital investment strengthen our business continuity, or continue to strengthen our business continuity. And I have to really shout out to the team. Our BCP, our business continuity plan, was aided by our digital investments. And Hurricane Melissa was the best test. I don't know if I can use the word best when it comes to Hurricane Melissa, but it was the true test of our capabilities and our business continuity. And our technology stood up 100% to that, and we were back online pretty much the next day. And our branches that were most affected were up and running over the next couple of weeks, with Black River being the final one in December prior to Christmas. Okay. Financial performance. We had a great year. Our net profit to stockholders was $16.2 billion, and it was a 76% increase over the previous year, and all business segments outperformed the previous year. Total revenue, $128.2 billion, reflecting continuous growth in revenue over the years. And again, our diverse business lines, insurance, commercial, and investment banking all grew. Our total assets now total $703.6 billion as of December 31st, 2025, an 18% increase. It was driven particularly there was a significant component of that was the work Chauvel and her team at Sagicor Bank are doing, as well as Sagicor Investments in growing deposits and other liabilities. Our stockholder equity, and when we speak of equity under the new insurance regulatory financial standard, IFRS 17, you have to consider CSM, which is a storehouse of profit for the future on our balance sheet. And when you look at that, our equity of 115 billion plus our CSM of 47.6 billion would lead to a total capital, in our view, of $162.7 billion, which is an 11% increase year over year. And when you see the CSM growing, it's a very good indicator of a healthy, primarily life insurance group. Dividends per share, you will see that of those 4 years, we had the highest dividend payout, $1.66 per share, and we're very proud of that, at 21% growth. In terms of financial strength, we remain top of the pile. Carry A stable, carry A plus stable in the regional rankings. And in terms of the Jamaica rankings, the local currency rating is AAA, which is the highest possible rating. Sagicor Life Jamaica, which is rated both by CariCris, is also AAA, but internationally by AM Best as BBB plus issuer credit rating, which is an extremely robust rating for a Caribbean entity operating under less than investment grade sovereign oversight. So other highlights, you will see that our insurance and commercial banking remained our largest revenue contributors, a total revenue of $128 billion, and that compares very favorably with $111 billion the year before. Across the business lines, again, strong earnings across every single business line, and of course, long and short-term insurance, which includes general insurance, delivered the lion's share of $12.5 billion, but we have to really single out our commercial bank, which touched $4 billion for the first time ever. And also I have to point out that investment banking has shown a significant return to strength that was hard hit by COVID. And we're looking forward to further growth both in Jamaica, in Cayman, where we have an investment bank, and throughout the Caribbean as we effect the merger. I won't spend a lot of time on this, but again, long-term insurance did well. Our revenue was up 26% year over year. The profit was up 57%. And our market leadership continues to result in significant and improved performance. Short term, again, we're very proud of this, moving to $3.2 billion. Again, recovering from significant impact of COVID with our health insurance and with medical insurance that skyrocketed in those years. Commercial banking, what else can I say? Give them another round of applause, please. But you see growth in assets, net interest margin increases, all of the various metrics that you measure banks by show very stable and significant improvement. Investment banking, again, a recovery, 1.7 billion. Net investment income increased by 50%. And we did deals of $200 million US in our corporate banking segment of our investment bank. Thank you. I take the credit for the good things, all right? Money services, which is our AFSL, had a good year again, 50% profit increase over last year. Latin America, our 50% joint venture, where we own 50% of our Latin American operations, and our partner Bank Promerica owns the other half. Doing well, you can see profits moved, our share of the profits moved from 226 to 281 million for the year 2025. Yes, 12 years with them, and it just continues to grow. We started Panama, our ownership of Panama a couple of years ago, and that is steadily improving. In terms of our capital adequacy as a regulated entity, you will see that all metrics are well above our internal limits as well as the minimum statutory requirements. Our Sagicor Life Jamaica's capital ratio was 152.8% versus a minimum of 100% by the regulator. And investments and bank were also well above the minimum measures by the regulator. Assets under management continue to be above $1 trillion Jamaican dollars, topping out at 1.184 trillion Jamaican dollars in 2025, between the balance sheet of 703 billion and 480 million off balance sheet, which is mainly our Sigma funds as well as our pension funds under management. People first remain the center of our business. Rewards, we continue to be reward focused. We won best in class awards at the Sagicor Financial Group in terms of team member of the year, etc., etc. We launched Spectra, which I'm very proud of, which is related to autism and our team members' children, and we continued mental health work within our team as other wellness work. And we continue to develop our people through programs such as Sagicor Lead and other very significant initiatives. Talent management, again, I spoke of Sagicor Lead, where we groom the young star performers for significant movement through their careers into senior management. Wellness and people relations. And Hurricane Melissa, we really stepped up supporting our team members who were affected. We spent $60 million supporting our team post Hurricane Melissa. And, you know, I think, Andre, when you came to Jamaica in January, you saw one of our team members who was badly affected and how grateful she was to the group for the support. And that has been across the board. In our communities, Sigma Run, every time I talk of Sigma Run, it's like a year in the back, but you know, it's 128 last year. We supported a number of very significant charities, especially, I mean, my favorite is Father Oolong, who did his dance on the stage, and he's a saint as far as I'm concerned. 30,000 people and 7,000 Jamaicans impacted positively. Youth and communities, our scholarship program. Adopt a School continues. The JTA Sagicor National Athletics Championships for primary schools continued. And Willard, you're shorter than the kids in the yeah. Post-Melissa rebuilding. We committed $200 million, and we continue to eat into that or to disperse that. We're working with the Ministry of Health to rebuild clinics up to the tune of $100 million, and that's in progress. We, as I said, $40 million in direct support and $20 million in loans to our team members, 16 all, and we do have community outreach and medical care. Willard, again, was very instrumental in leading a medical group to various affected areas to work with communities which had destroyed clinics, destroyed hospitals, etc. Sorry, I have to go back to Sigma. This year, Sigma now raised $150 million, and we committed to restoring 5 schools in the affected parishes, and I'm happy to report that we have already started construction on 2 of those schools, and the other 3 are awaiting contractors and the whole contractor process. Community impact at scale. Sagicor remains committed for improving the lives of the people in the communities that we serve. Our outlook is one of confidence, anchored by resilience, as we showed last year, adaptability, and the one Sagicor vision. We continue to deliver performance through a diversified business model which helps in volatile times such as what we're going through now. Strong governance, you heard about our score at the Jamaica Stock Exchange, disciplined execution, risk management, and even if we have economic headwinds, as we seem to always have nowadays, and the post-hurricane recovery, we were able to deliver strong performance. With digital transformation, continued innovation, Sagicor Group Caribbean in the future, we are very optimistic and we are focused on continuing to deepen our relationships with our clients, investing in talent, expanding regional, as we have said, and delivering sustainable long-term value to all stakeholders. So thank you very much. We'll take questions.
Hi. Okay, so we're going to do things a little differently this time. We're going to have the questions answered from the seats, since we have our mics here, so we don't have to waste time getting up and down. We'll be happy to answer any comments or questions. Obviously, the shareholders may also direct questions to the auditors who are well represented here regarding the audit process, the audit report, the accounting policies followed by the company, and the auditor's independence during the audit. Again, I'm going to just stress, I will ask everybody to, manage themselves within this process. We're going to call on everyone, state your name, and then we will be ready to answer your questions. And then also in one-on-ones after the meeting, if you need further expansion, or we'll respond officially for questions we don't actually get to touch today. So with that in mind, I'm going to open up. I think I promised Livingston first cut though. Oh, he's seated. He's a true gentleman. I understand. All right. Okay. Cool. All right.
Microphone not working. I think
it's good now.
All right, it's working.
Yeah.
Okay. Prior to the meeting, I read the report. As the chairman mentioned, which is save the trees and go online and read the reports. Right? I agree with him totally on that. Okay. The merger, which is they're gonna change to. Oh, Robert March. Yeah, correct. Sorry about that. The merger, which you're going to go to SGC, which I'm glad for, because I keep mixing up SJ and SGJ. If you turn to page 12 on your report, and I saw this on the Unified Caribbean Operations. I saw this online before, prior to the meeting. When I came, I got the book. I still see it again. So if you turn to page 12, the middle column there, Unified Caribbean Operations, SGJ belongs to another large financial conglomerate. I don't want to call any names, but SGJ is already taken. You cannot use SGJ. You cannot switch from SGC. SJ is Sagicor Jamaica Group. It's SJ. I don't have SJG. It's SJ, Sagicor Jamaica.
Yeah, you're right.
Right. So, you're just pointing out to you.
For a shareholder who is invested, SJ is the correct term.
Right.
Yeah.
It's not
but we generically use SGJ in all of our publications.
Right, but on the stock exchange.
Yeah, I understand.
All right.
You're right.
So, you're still at SJ right now because you haven't got regulatory approval as yet or shareholder approval. So you're still SJ. Correct?
Yes, we are. Yes,
right.
We are.
All right. So just pointing that out to you, that, you need to, but when are you going to change to SGJ? Because I keep mixing up SJ and S.
All right. So as I said, Sagicor Group Caribbean
Right.
will be listed on the stock exchange in Jamaica. SGJ will no longer be listed.
Right.
SJ
SJ.
will no longer be listed.
When will that be?
Um,
I keep getting mixed
we
up.
have to wait on a court process.
Before the end of the year?
Yes, certainly by
Okay,
the end
all
of the
right.
year. And we will probably use, well, I won't say what we'll use in terms of, we're going to aim for SGC.
Yeah, that sounds good. That's
yeah.
good. As long as it's not SJC, you know, because
There's no SGC, is there?
S.
All right. SGC. So
Right,
we will have no
SJC.
discussion
There's
in the
no
future.
mix up there, right?
That's
Instead
right.
of SJ and SGC.
Correct. Thank you.
Afternoon, Mr. Chairman. Livingston Young. We're going to start with insurance revenues, page 158. But my first question on insurance, based upon the company, I suppose Merrick Super Plus, and you get the card, this card where you get, it's for 12 months, right? Right up and down, use it none at all. Right? Like if you go at the dentist, clean your teeth or something, you don't use it none at all. See, that money we have on it, suppose, as we said, 12 months, that money we have on it, I don't use it. Would you get it back on the next one if they are thing that?
If we did that, insurance doesn't work like that, and if we did that, we wouldn't even be in this room. We'd be completely broke. But the answer is no.
Oh, so you have to restart back again. So that money dead then. All right.
Good try, though.
So page 158, note 5, segment of financial information, insurance. All right, the first one is insurance service expense of $19,768,151. You can give explanation between 2024 of the bracket here, 14,866,000 and $903. Can explanation on it, please? Insurance, net expense.
I think you're reading 2024, right?
Yeah, the group, Mr.
Right, so you want to ask about 24 or 25?
Two of them, 2024 and 25.
So the first number is our revenue, sales,
Yeah.
policy revenue, and the second number is claims and other expenses related to life insurance and other types of insurance.
Look at this one, Mr. Chairman. Credit impact of revenue losses. I see I have some addition here of 617,336,000. Explanation it and the column between team insurance. Log of team insurance, right under 14,800,000. You see,
So the first thing is you're playing us down is billions. There's 3 zeros after those numbers. But I tell you what, Livingston, if you want, we could have our CFO go through this with you in due course.
All right. Just jump down to look a bit. Jump down to this look a bit. Jump down to free and other revenue. What made up this other revenue of 151,200,000? Give an explanation, please. Okay. All right, mister.
Good afternoon, everybody. Wait, please. Good afternoon, everybody. Good afternoon to the persons viewing, such as incoming SGC Chairman Dodridge Miller, Kathleen McLaughlin. Malcolm G is not available online. Director present in the room. Shareholders, other stakeholders. Afternoon, shareholder David Rose. So, my first question. This is related to your presentation, CEO Zaka. So during your presentation, you mentioned that there would be a mixture of debt and equity under this new holding company structure. CEO of the financial company, Maso, mentioned last week that there's going to be an injection from SFC in terms of that overall structure. So the first question is, with respect to this, merger, is it that there's going to be some form of promissory note arrangement between Sagicor Group Jamaica and Sagicor Life to SGC in that merger structure?
No, there may no promissory note between SGG and SGC.
Understood. Then with respect to the debt and equity
So,
addition,
go ahead.
with respect to debt and equity addition, you mentioned that there'd be a third-party financing raised from an equity standpoint. I understand about the debt right now. So in terms of that capital inflow to the overall structure, I know you can't give specific details to the terms of how much you're going to raise at the moment, but what's the overarching impact of that financing in this new overall holdco, which is SGC?
So I will, as you're rightfully say, I can't get into any significant details, but the SGC, the new holding company, will be raising capital to effect the merger as well as to capitalize create a platform for growth as is expected from the merger to expand our business, etc. And I will add that both SFC and Panjam have committed to supporting this raise in the form of equity.
Understood. And the debt component is just part of that overall capital structure balance.
Yeah, it's, as you know, it's prudent to have a mix of debt and equity in your capital structure.
Understood. Then I'm going to just go to the annual report to my next question. So give me a second. So page 197 for those who want to follow me. So IFRS 17 is still somewhat French to us laymen who are not blessed with the PwC insights and guidance. So under the previous IFRS standard, IFRS 4, it's a little bit clearer to interpret, what would have happened in the once-in-a-lifetime event from the short-term insurance or general insurance segment. So with respect to the 2025 period, there would have been an 18.68 billion inflow from reinsurance contracts held, and there would have been a correspondent increase in property and casualty expenses. So is it that even if the related subsidiary had not received the payment from the reinsurers as yet, you're required to recognize this balancing effect of their net inflows from the reinsurers vis-a-vis expected assumed claims? You want a mic?
Can you hear me?
We're slightly hearing you.
Yes, so the short answer is yes. But there are some caveats around whether you believe that the amount is certain. Our reinsurers are all highly credit rated, so we have no concerns around the collectability.
The collectability is not my major concern. It was just in terms of how to interpret the recognition of the reinsurance contract amounts in this current standard vis-a-vis what you had seen in the prior periods. It's just the interpretation. So
you're just talking about how we recognize, say, a payment.
And how to interpret it a little bit better for the layman, basically.
Yeah, so remember, you're supposed to recognize the reinsurance recoverable in totality. And if it is certain that you're going to collect, and we are certain we're going to collect, so we recognize all of it. The fact that they pay some basically on account is neither here nor there. That is just separated between what is recoverable as outstanding versus already paid.
Understood. And just to get some further clarity from you, CFO Ho Long. So with respect to the first quarter, there was additional 0.77 billion in provisions related to Hurricane Melissa. was that was that related to additional claims coming in, or just more
Correct.
so estimated?
Correct.
As
You're correct. So you would remember that the whole island was in, basically in emergency mode for a very long time. There weren't enough loss adjusters, I think that was mentioned earlier. We used the information we had available as at even into January to record our claims numbers in the financial statements for the year ended 31st of December. Subsequent to that, we get more information, we get more reports of claims and so on. I believe that virtually, I would say the vast majority of claims have now been submitted to AGI. Claims adjudication will take some time, particularly if the claims are complex. So yes, we have recognized additional provisions, but we don't really expect that there are going to be these kinds of large shifts. It's really about timing of information as provided to us.
No, that's understandable. And just to follow up on the Hurricane Melissa query before CEO Zaka gets on with his follow-up. So you mentioned the settlement, or the claim adjudication processes will take some time based on the size and complexity of this event. Just from what you understand at the moment, from submitted claims at the moment, how much have you actually adjudicated from that Hurricane Melissa event?
I would say about half, and those have been fairly represented by reinsurance as well. So, there's no net cash drag on AGI.
Appreciated. You have comments? Understood. I guess this question can go towards you, CEO Zaka, or to any of the other executives. So basically, 2004, there would have been a significant, year-on-year increase in the purchase of investment securities and just repurchase agreements on other assets. And, last year would have been relatively volatile, which created opportunity for the group to capitalize and get better returns for policyholders and clients. Is it the current posture that in this increasingly volatile environment that you're seeing great opportunities to acquire discounted assets to realize greater value in the current environment between last year into this year?
Well, I'll ask Tracy to comment, the Chief Investment Officer, but generally the teams are very focused almost on a daily basis on the markets, especially in volatile times.
To come up because Chris answered perfectly. So yes, David, as a part of our daily business as usual, it's capitalizing on the opportunities in the market. So we are constantly, every day, looking at where the opportunities are. Chris would have mentioned in terms of the diversification of our business, that allows us to, where things may not be going well in one particular area, we take advantage on the other.
Understood. This question can go towards the CEO Zaka or CEO Johnson Cunningham, or even CFO Ho Long. So during 2025, you would have transferred 1.75 billion to the statutory reserve fund, further strengthening the regulatory capital of the bank. And during the first quarter, there would have been bringing it up right now, a $500 million transfer to retained earnings reserve. I know that Basel III is somewhat still in train at the moment. And I'm not going to necessarily ask about the preparation for Basel III because I believe we're already relatively well capitalized. But in terms of the strengthening of the capital base, can you give some further context on the strategy going forward?
Well, I believe the transfer to the stat fund is a statutory requirement.
You're already above it, so.
Well, CFO.
So we are usually very proactive with the bank's capital positioning. We don't normally wait until we reach to the proportion according to the law. Usually we make the transfers based on what we project as whatever the loan outflows and the different factors that we see. So yes, it was a large transfer right after the year end. But I don't think it's unusual in any way.
And I will say that it's not a Basel III related transfer.
It's a related preparatory measure, you
No,
mean?
because I think we're waiting on further details on Basel III, to be honest with you.
Appreciated CEO Zaka. Can I direct my question to CEO Johnson Cunningham, since she's been praised so much for her work last year at the bank? So I realized that there was about $20 billion in increased loan outflows at the bank level in 2025. And I'm not sure what the specific growth for the first quarter is related to the Jamaican bank, but the first query would be, where were you seeing the significant attributable area of growth there in 2025, whether it be from, let's say, businesses, tourism, or sector? And then the second question is, how has loan demand relatively held up, in this current environment between post-Melissa and now higher inflation?
Thanks for the questions, David. All right, so let me take the second one first. The fact is that Sagicor Bank is well diversified. We have corporate, retail, and SME. From our retail segments, you know that you'll always need mortgages. So no matter what is happening, people want homes to live in, right? And right. So as a part of our strategy, whether or not the economy is going sideways or otherwise, we try to stick to that strategy. So it means that one or all of the sectors that we're diversified in will continue to perform.
Understood. And then the first question with respect to the loan growth last year.
So the corporate team did very well, and we also did an increase in mortgages last year. And we have a team that we do diversification play across the Caribbean, so we've been doing some syndications. So at the beginning of the year, there are some syndications that we did across the Caribbean, and we continue to look out for those opportunities.
And this is just a follow-up, not related to financials, but more so to business strategy. So, Sagicor Bank would have been with a Jamdex, while it provided, I don't think that's a term, but within the Jamdex framework back around 2023, 2024, the BOJ said there were 2 commercial banks that were planning to launch last year or delayed because of Melissa. So first question is related to, Sagicor Bank's, push into the digital wallet space. I know you already have the MasterCard introduced product. And then the other part of the question, is related to the digital enhancements. So there's mention of Apple Pay, there's mention of introducing ACH online, just that digital posture, response.
All right, so in terms of CBDC, we're in the process of working with the BOJ to get that out. I foresee it happening before, or I'd say by the latest, the first quarter of next year. By the latest. Because we can never tell what might happen, all right? In terms of, you said ACH?
Yes.
We're currently upgrading our e-bank platform, so ACH will be available in short order. And in terms of the Apple Pay tokenization and all of those things, those are things that we have in our trajectory in the medium term, short to medium term.
Understood. Thank you, CEO Johnson Cunningham. And my last major question is towards CEO Masso. David, I'm surprised you're going away. So I'll quote you from last Friday's earnings call. In addition, we took some charges in the Caribbean as we settle open issues and drive forward on our integration plans as we look to give our new public holding company that will hold all of our Caribbean assets the best start that it can have in 2027. And during the March earnings call, you would have mentioned the use of AI to tackle data transformation challenges within the Caribbean. So I know you've already done a lot of work in the IVAR, which is Sagicor Canada, Sagicor USA, in terms of the digital posture there. But in respect to the new Caribbean focus, CEO Zaka have mentioned some parts of digital transformation, but with respect to the Sagicor Group Caribbean integration, can you give further context on what those challenges are and how they're going to be solved between use of AI and third-party vendors in that strategy?
I'm writing this down, David.
Apologies. I'll be there for next year's SFC AGM Barbados as well.
Well, to be fair, his question last week I think had 13 parts, and so this is relatively brief. So the first question, which is relatively discrete from the last, was about the charges that SFC took within the Caribbean.
Yes.
And those were, off the top of my head, $13 million US dollars.
Correct.
Those related to SLI, and so they're not germane to the Jamaica Group shareholders yet. You attended that meeting virtually and you heard the commentary. We are using the pre-merger process as an opportunity to clean things up, so to speak, and make sure that the companies are delivered in the best financial shape to have the best return on equity going forward. So as we continue to do that, there may be bits and pieces of that throughout the year, and then starting in Q4 of this year or Q1 next year, in effect, you'll get a fresh start with the single Caribbean group. The rest of your question was about
artificial intelligence and the data transformation initiative that's going to be taken across the Caribbean, between SLI and SJ.
Right. So artificial intelligence is being used as a shorthand nowadays for all sorts of the evolution of technology. And the AI is an important component part, but there are a number of technological advances that have really accelerated over the past 5 years or so that make now an especially opportune time to take advantage of a combination like this. A lot of the advances are not purely technology, but they're enabled by technology in terms of getting everyone across the Caribbean onto new systems, in terms of those systems being able to be hosted in the cloud, which reduces infrastructure costs, and so on, and the annual just total cost of operations. And so that piece has enabled a combination that would have been almost unthinkable 10 years ago, in terms of the ability of, 10 or 15 years ago, if you were trying this, you might have had to choose between different centers, physical centers of excellence, if you wanted to combine teams. But now it's quite easy to, for example, have a single team of underwriters that are populated by the best underwriters that we have anywhere within the system. They can be in Jamaica, they can be in Trinidad, they can be in Barbados, they can be in Panama, and they can all work together in a way that would have been difficult to impossible, 10 plus years ago. And so that's not a matter of AI per se, but it is a matter of the technological evolution. I think where you look at AI really having an effect, we're not, sorry, this thing isn't working very well. We're not doing too much on the customer-focused end, but what you can really observe on the back end is that AI is very good at combing through data and picking data out and repackaging it for new systems. And so as we have these very old systems with black and green screens on them that we use to administer our nuts and bolts, our insurance policies. You can use AI to go and find the data and populate into new systems. And what that does is it radically increases the speed at which you can run in a digital transformation, and it makes it a lot cheaper.
Thanks for the reply, CEO Musso, because I remember in last week's AGM you mentioned that it's both a front end and back end advantage for both policyholders and clients, and I believe CEO want to say something.
No.
All right, Mr. Rose, I have to cut you off here. Thank you very much.
Can I just give to Mr. I can't remember your last name, and my colleague Mr. Daniel White as well.
All right. We have a few more minutes, just a few more minutes.
All right, one more. What I want to understand now is Sagicor Jamaica, as I know it, because I'm a shareholder and I only know Sagicor SJ, right? So SGC, Sagicor is expanding, growing out in the Caribbean and Latin America, right? So by next year, you're going to have a SGC bank in Panama. You're going to be spreading your bank or just...
So, yeah, I mean, we want to expand all of our businesses in the areas that we serve. Latin America, probably not commercial banking in the near future.
But in the islands, you're going to have it, all of the
Well,
Trinidad,
we're going to,
Barbados.
yeah, the strategies around working throughout the Caribbean as one Sagicor in all the areas of business we serve.
Okay.
Arthur Ellison. I've, lived long enough to have been a long-time shareholder, and I've enjoyed doing that. Would you like to make a comment on the kind of future you expect for Sagicor's M&D and F funds, on which you've done so much litigation recently?
Sure. Tracy?
Thanks for that question. For the benefit of everyone, you're referring to our Sagicor Select funds. Right. So we would have undertaken a court order scheme of arrangement. We got our shareholder approval. We got the court's approval. We're now in the regulatory process of registration of the collective investment scheme. While that process is going on, we're also internally building out an online platform so that we can have seamless onboarding when the time comes. As soon as we receive the approval from our regulator, from the FSC, then we'll proceed to apply it to the stock exchange for delisting and then have the shareholders converted into unit holders under the new unit trust scheme.
All right.
Hoping to have that done before the end of Q3.
Before the end of?
Q3.
I'm glad to hear that. Equally, there is a concern that the F fund has been doing very badly through most of its life. The M&D, has recovered somewhat, but what can we reasonably expect from the routes that you're following along getting all of this done? Logically, increase is what we really aim for.
Yes, so that is the expectation. So the funds in the current form, the pricing is a reflection of market demand and supply. And so, as you pointed out, there is a disparity between the price that it's trading at and the actual underlying value. With the conversion to a unit trust, the unit holders realize the actual net asset value. So you realize the value of the underlying assets. Yes, but that would result in an increase in what you are actually realizing from a value standpoint. Right now, your value is determined by what John Brown trades it at.
We're looking forward to your success on this route because, frankly,
Thank you.
You earn a lot better returns than on savings account. Yeah. Here's looking forward to your success.
All right. Thank you so much.
All right, we just got one question each because we really time is against us now. Yes, sir.
Good afternoon. My name is Josiah Williams.
Sorry, say it.
Josiah Williams.
Mr. Williams? Josiah Williams? Thank you, Mr. Williams.
All right. I guess you're doing good with the pension scheme, right? I'm a pensioner. Now, some of the pensioners going on, what they're getting, going on hard time right now. And I guess the pension scheme have some surplus in it. Trying to get audience with the trustee, not getting through. But hope you people could do something for us.
I think we can take that offline.
So just to be clear, you're a Sagicor pensioner?
Right.
Yeah, so we take that offline.
Yeah, we speak to you after the meeting.
I'll have somebody take your details, and then we get somebody.
Yeah, because it's not me alone,
Yeah, I know.
All right. So. Second thing, this new company that you're going to form, are you going to pay? Who's going to be responsible for it? Are we going to pay royalty after you successful with it?
No, no. It's going to be governed by a board of directors. The shareholders, the two largest shareholders, well, SFC, who is the current parent of Sagicor Jamaica, will continue to be the parent, and Panjam will continue to be a significant shareholder in the new entity, and the governance will be along the lines of the current governance. There is a new nominated chairman is the Most Honorable Doddridge Miller, who is a member of this current board.
Because the reason why I asked, just a fortnight ago, in one of the print media, you see we are shareholders losing over $17 per share.
Yeah, I'm aware, but that's a different company.
Yes,
and we don't intend to do that.
That is why I'm asking you
right
from now. Last week I was at a shareholders meeting, and it's the same thing come up again. Where money have to go to the parent company after you make, and after some time, 3 years you don't get a dividend. We, the minority shareholders, we're going through a hard time too.
So, if I may, we wouldn't comment on how other companies would operate their Jamaican subsidiary, but as a point of principle, that is not how Sagicor acts with its subsidiaries. I can say definitively there will be no royalty payment for our beautiful Phoenix logo or any such.
All right. Pardon me, Mr. Chairman. I bought insurance about 27 years ago. I think it's Universal Life. Policy will come up for review, right? When the statement that I got, right, the premium premium double, and the what I take out the policy at, right? Is the same money, and telling me that what I'm paying now can furnish the policy. After over 30 years, to 27 to 30 years, hearing that, and at the time when you're not working again.
Okay. I think that's another one where Josiah, we'll talk to you after, get somebody to get your details and talk to you about after. But thanks for raising it. Thank you for raising all of those. Livingston, you have one question now, because we're really running out of time here now.
What are the plans for grow the bank sectors?
So, continue to grow them, you mean? So we have been growing steadily, and the merger in the Caribbean will provide a platform that will, in our view, accelerate that growth, lead to efficiencies, lead to a wider client base, and more opportunities to collaborate throughout the region. So that's the answer.
You know, Mr. Zaka, when was a boy?
Remember, we said one question.
Yeah, I know. Let's hear me out. No, let's hear me out a little bit. When was a boy, you have online. When we just watch the thing, NBC, them have the online American, online something that never reach Jamaica yet, when we reach Jamaica, when we have Corona, one of them, something there, realize the online things start coming. So most people never get to understand how the online thing work. And that's about, hear me out, Mr. Chairman. It's like, it's a stubbornness between the Jamaican dollar and the US dollar in the business. Jamaican dollar value less than 3 cents to the US. So it's hard for the Jamaican is come up. When you look, you give us an interest. Is that if you have $1 million or $2 million, come under 2%, you get a interest, after one give you, 2%, 3%. We get chicken feed to compare them, and we have millions because of the devaluation of the Jamaican dollar. Why we not see no growth? We need to upscale our money to that so it can value. That's me and you can see a prefer. We get richer and richer because our money not value. So if I not say the country keep on going to stifle. We need to grow up, we upscale with things, Mr. Zaka.
All right.
Turn the page.
Livingston, because Livingston, I can't, because we're going to run out of time. There are 2 other people who haven't asked any questions. I want to get at least one from them. You can ask Mr. Holong, right? Anything on that paper, you can ask Mr. Holong. after he can give you an answer. Thank you. Yes, sir.
Hello, my name is Daniel White, and my question is, say, for post Melissa, have you seen or do you foresee where more persons have been taking out more loans and insurance?
In insurance, I think people are more aware of the value of having insurance on their property. So, and also insuring their property for the right amount. So we do see as recovery happens, that you will see more people making use of insurance on their property. In terms of life insurance, we continue to really grow our revenues with or without the hurricane.
Okay. All right, thank you.
On loans, you heard Sagicor Bank's performance last year, and that included a quarter with Melissa. So we're very robust in that area.
All right, thank you so much.
Thank you, thank you.
Pleasant afternoon, Lansdale, Bloomfield here, shareholder. Mr. Chair, page 124, note 23. In 2024, your retained earnings was 78 billion 369 million and 76. And in 2025, this has increased to 86.387676 billion. Since you have only paid out only 2 dividends, what are the plans to pay out some more dividends?
Well, first of all, our retained earnings increased because of the stellar profits that we made in the year, which I think we've acknowledged here. We have a dividend policy, sir. We have to balance between the capital strength of the organization and paying adequate reward to our shareholders. We have a stated dividend policy of 40% of earnings, and we've been cleaving to that. We've been making sure that we hit that target.
It hasn't reached 40%, has it?
40% of earnings, yes.
Are you sure about that, Mr. Chair?
Yeah,
because
I'm pretty sure.
With the 86...
Unless I've been attending the wrong board meetings, I'm pretty sure.
So, what are the plans to give us some more? Because those 2 dividend payments are over the 2 quarters. So, are there any other plans to pay out some more dividends over the next 2 quarters?
After the first 6 months of this year, the board will consider a new dividend post the 6-month period.
All right. Thank you very much.
Thank you, sir. Thank you. Appreciate that question. All right, folks. So we're going to thank you very much, everyone. Some really great questions and good engagement. So thanks, everyone. Yeah, and Mr. Livingston, you can definitely ask Mr. Holong that question at the end there. Next time, okay, all right, okay. It's an evergreen question. I like that. All right, so with no further questions, I'm now going to put the vote for the resolution for the adoption of the audited accounts for the year ended December 31, 2025, and the reports of the directors and auditors thereon before the meeting. Resolution number 1, that the audited accounts and reports of the directors and the auditors for the year ended December 31, 2025 be and are hereby adopted. Proposer, please, Mr. Rose. Seconder, Joanna, thank you so much. All in favor? Any against? Okay, so motion carried. Thank you very much. We're going to proceed now to the second item of business, and forgive me if I'm speed reading, but we have to try and get through quickly. We'll now move to resolution 2 on the agenda, the re-election of directors en bloc. The profiles of the directors who are up for re-election can be found on pages 19 to 23 of the annual report. Article 98 of the Company's Articles of Incorporation provides that 1/3 of the directors, or if their number is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are Directors Peter Clark, Dr. Doddridge Miller, Andre Masseau, Philip Armstrong, and Jeffrey Hall, who retire by rotation and are eligible for re-election. I'd like to seek permission of the meeting to have the directors appointed en bloc. So could I have a proposer for that motion? David, Cedric around the back, thank you very much. All in favor? Sure. Okay.
Okay. Here's a case where we're re-electing 3 directors. Wouldn't you get a little bit, I expect it's a bit tidy to re-elect them en bloc, but wouldn't it be a little bit better to get a little more shareholder participation by re-electing them individually, just so that we know every shareholder gets a chance to make a comment on the 3 directors?
Well, it's actually 5 in this go around, so it is a bit. But if there's any dissent around doing them en bloc, then I will move to the second procedure, which is to actually do them individually.
Well, I don't know whether there's any dissent, but I'm saying that if you suggest that to a meeting, that is, we do it individually, then your audience is going to be a little bit more attached to your activity.
Well, the way it works, sir, is that if you do dissent, follow me through now. If you dissent, then that's an official dissent, and then we will go to section, I think it's 178 of our articles.
That's not an official dissent.
Okay.
It's a recommendation.
A request.
Or perhaps
Can I take the temperature in the room? Anybody wants to go individually, or will we en bloc? All right. All right. Well, I thank you for not officially for getting us into section 178. I appreciate the recommendation, but I think we're the general group has it as we're going to go en bloc. All right. Well, thank you for your suggestion, nevertheless, sir. So okay. So now I'm going to seek the permission. So we've got the permission of en bloc, and then that the election of directors be made en bloc. Okay. Can we have just a proposal for the en bloc? Thank you. And then Livingston seconds for the thing. Now I'm going to actually put the resolution to the meeting. Resolution number 3, that directors Peter Clark, Dr. Doddridge Miller, Andre Mousseau, Philip Armstrong, and Jeffrey Hall, actually, sorry, 6. Is that 6 or 5? 5, actually. Who retire by rotation are eligible for re-election, be and are hereby re-elected as directors of the company en bloc. David, thank you. Thank you very much. Those in favor? Okay, any against? All right, the ayes have it. Declare the motion carried. We're now on to remuneration of directors. The next resolution, therefore, is that the amount of $44,417,275, including the audited accounts of the company for the year ended December 31, 2025, as remuneration for their services as directors, be and is hereby approved. David? Okay, sir. Thank you very much. Thank you for that. I now invite a shareholder we just had a proposer and a seconder. I now put the resolution to the meeting. Those in favor? Aye. Any against? Okay, the ayes have it. So that motion is carried. Thank you. We're now on to the remuneration of the auditors, which pertains to the appointment of auditors. PricewaterhouseCoopers, chartered accountants, have indicated their willingness to continue in office as auditors and do so in accordance with the provisions of the Companies Act. Additionally, the meeting is being asked to authorize the directors to fix the remuneration of the auditors. So resolution number 5, that PricewaterhouseCoopers, chartered accountants, have agreed to continue in office as auditors, be and are hereby appointed auditors for the company to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. All right, Livingston, seconded. David. All right. Those in favor? Okay, any against? Okay, ayes have it, motion carried. Ratification of interim dividends. The 6th and final agenda item deals with the ratification of dividends. During 2025, the company made 2 dividend payments, and the meeting is being asked to adopt the following resolution to ratify and declare the payment of the dividend as final. Resolution number 6 says that the interim dividends of 77 cents paid on the 30th day of April 2025 and 89 cents paid on the 16th day of October 2025, respectively, be and are hereby ratified and declared as final for the year ended December 31. Thank you, sir. Yes, sir. Your name, sir? Wait, of course. Didn't recognize you behind the beard there. Sorry. I think an old schoolmate of mine, sir. Really bad. Apologize, sir. Okay, so we have a mover and a seconder. Can I put this resolution now to the meeting? Those in favor? Pardon? No, I'm asking those in favor. No, I'm not going to ask any against. Those in favor? All right, any against? You're against Livingston. Okay. Okay, so a target, you want us to go for a target of 90 cents. Okay, I think Mr. Zaka has heard you loud and clear. All right. So with all of that said, we're now at termination. So ladies and gentlemen, pardon? What's that? Oh, the ayes have it. Sorry, yes, I should have. Yes, sorry, thank you. The ayes have it. Despite Livingston's exhortation that we get to 90 cents, the ayes have it. All right, I hear you. Right, yeah. I've taken your point on the stubbornness of the Jamaican dollar. I think it's a very good one. Ladies and gentlemen, we now have concluded the official business of the meeting. Thank you for your interest and contribution throughout this session. I now call for the termination of this meeting and invite a shareholder to propose. Joanna, seconder. Thank you so much. All in favor? Aye. All right. Motion carried. Thanks again. There's food outside.